Welcome back to our channel, where today we explore why the current economic landscape may favor bonds over stocks. With the stock market riding high, many have started to question whether this is a sustainable rally or a bubble waiting to burst. When looking at the overall market performance, it becomes clear that while stocks have soared, they may have outpaced their intrinsic value. This creates an environment filled with potential pitfalls for the unprepared investor. As such, the conversation is shifting towards a more cautious approach as we navigate these turbulent waters. Now let's delve into why bonds could be the answer during these uncertain times. Bonds are generally viewed as a more secure investment compared to stocks. Their intrinsic nature provides a steady income and minimizes risk exposure, making them particularly appealing amidst fluctuating stock valuations. With interest rates on the verge of a decline, purchasing bonds becomes an enticing proposition. Lower interest rates lead to rising bond prices, allowing investors to capitalize on capital gains while enjoying consistent interest payments. Furthermore, with a potential economic slowdown looming on the horizon, the benefits of holding bonds become even more pronounced. They act as a fortress against impending market corrections, preserving capital while maintaining a pathway for returns. As cautious investors look to shield their assets, the bond market stands ready to provide an effective alternative. With a calculated approach, shifting from stocks to bonds could very well be the strategic move for those aiming to safeguard their portfolios during these unpredictable times. As we delve into the outlook for interest rates, it becomes apparent that after a sustained period of increment, a reversal may soon be on the horizon. This anticipation is crucial, especially for bond investors, as decreasing interest rates can elevate the value of existing bonds. When rates drop, the yields from these bonds become significantly more appealing compared to newer issues, making them a valuable asset in a carefully curated portfolio. Investors who foresee a decline in interest rates should consider the strategic advantage of locking in bonds at present rates. This could lead to considerable upside potential, providing a cushion against market fluctuations. By seizing the opportunity now, you position yourself to benefit from the anticipated appreciation in bond values, enhancing your investment's profitability. When weighing the risk between bonds and stocks, the stark contrast is evident. Stocks carry a risk profile defined by volatility, often swaying in response to market sentiments and economic fluctuations. In times of market overvaluation, stockholders risk facing substantial losses during corrections. In contrast, bonds tend to offer stability, particularly as declining interest rates bolster their attractiveness, allowing bondholders to experience more consistent returns. For those still inclined towards equities, diversifying with bonds can serve as a prudent strategy. Bonds provide a buffer, mitigating the potential adverse effects of stock market downturns. This strategic allocation not only smooths out returns, but also reduces overall investment risk, aiming for a more balanced financial future. Indeed, seasoned investors often champion the inclusion of bonds to cultivate resilience within their portfolios. At AlphaBridge Advisors, we empower investors with actionable insights and cutting-edge resources. Our mission is to bridge the knowledge gap, providing expert guidance on market analysis, investment strategies, and risk management. With unbiased research and tailored support, you'll make informed decisions and optimize your portfolio. Join our community today to access exclusive reports and strategic insights that keep you ahead in the dynamic investment landscape. In a world of fluctuating markets, bonds stand as a beacon of stability, particularly when the stock market feels stretched. With many investors worried about overvaluation and the looming potential of interest rate drops, bonds present a compelling alternative worth considering. They provide not just safety but also the potential for growth, catering to those who prefer a more cautious investment approach. As you reflect on your portfolio strategy, remember the importance of diversification. Bonds can serve as a counterbalance to volatility, ensuring that you are well prepared for any market shifts. It's an opportune moment to reassess your investment choices, looking towards the enduring security that bonds offer amidst uncertainty. Thank you for your engagement. If you're pondering bond investments, share your thoughts in the comments. Together we can explore smarter investing strategies and embrace a future filled with financial wisdom. Until our next discussion, keep investing wisely.